With all that uncertainty across the stock market today, you might be worried at home about your retirement account today.
Yeah, it is a valid concern given 3 days straight of market declines. 69 News reporter Rob Manch is here in the studio with us tonight after speaking with some financial advisors about what this could mean for our retirement accounts. Rob.
Yeah, that's right, guys. So the good news is at the end of the day here, it was not quite as awful as it looked like it was going to be this morning. But the financial advisors I spoke with say the short-term volatility of the last few days is not a fatal blow for your retirement account. You just need to always be planning for the long term. Kathryn Brown and Dennis Morton are the founders of Morton Brown Family Wealth in Allentown. Like many, they're paying attention to the downturn in the market spurred by the Trump administration's widespread tariffs. They're telling all their clients, pay attention, but don't obsess.
It's a good time to check in on your plan, a good time to check in on your risk profile, but to have an immediate reaction to watch it on a minute-by-minute basis, I think can be really stressful.
Stressful because some economists are predicting a change in American consumer behavior could lead to a recession later this year.
If they start worrying about job security, they'll be saving, not spending. That then becomes a self-fulfilling negative scenario for the U.S. economy.
But Brown says the worst thing you can do is overreact to market volatility and sell your investments on a large scale.
Because once you make that decision, you have another decision. When do I get back in? And usually the time to get back in is when it feels the worst. Usually by the time things feel better, we're already well into the recovery.
So instead of trying to predict the market, they recommend holding on and maybe moving money into less volatile investments because the market is unpredictable.
It can be V-shaped. It can turn on a dime, and that's all the more reason for investors to be cautious about trying to go all in or all out.
And Dennis Morton, you just heard from there, says most retirement accounts are pretty diversified, which means if you have a 401k, it's most likely not all in stocks. And some parts of the market are still doing well. Morton says bonds, for example, are up overall on the year so far.